All right. Welcome, everyone. You can see we have a couple of people already on the call. Thank you so much for joining us, and thank you for joining the Duplo webinar series. My name is Promise Ekeoba, and I'm the Senior Growth Marketing Specialist here at Duplo, and I will be your wonderful moderator for this webinar. With me today, I have Peter Nwofia and Clementina Ogbolu, who will be our panelists and will also help me in driving the conversation that we have today. The theme or the title of this webinar is Leveraging Technology for Simplifying Tax Management. And as some of you already know, tax has been a recurring conversation, especially in recent times. And so we decided that at Duplo, we want to bring this conversation to the front burner and see how we can help businesses and individuals improve the way they manage tax for their business and also for the companies that they work for. At Duplo, we are always all and about helping finance people improve the way they manage financial operations. We're a B2B fintech, and we help businesses automate things like your approval workflows. We help you improve how you manage your expenses. We help you make faster payments. We help you make more seamless cross-border transactions. And finance people are the heart of what we do, and we want to make sure that you do your best at your place of work. And so that's why we've brought our two wonderful panelists here, Mr. Peter Nwofia and Clementina. And it's just going to be an interactive session. So if you have questions, I know that some of you already sent questions while you were registering, but if you do have other questions here, I'd encourage you to please use the Q&A feature. The webinar is going to go on for the discussions will go on for about 40 to 45 minutes. And then after that, we'll go into the Q&A session. So if you have any question while we're discussing, or maybe we talk about something that you need more clarity on, please do well to use the Q&A feature. Your questions will be prioritized before we go into live questions. And I'm sure our panelists will do a very great job at answering some of your questions. All right, so let's get straight into it. I would like us to just do a quick activity on the call. I know that we had so many people come in for registrations, but I'd like to know where you're dialing from. Do we have people dialing from? I know we have people dialing from different parts of Nigeria, but I'd like to know where you're dialing from. What states, in Nigeria are you dialing from? Are you dialing in from Lagos? Are you dialing in from Abuja? Are you dialing in from Kano? Are you dialing in from Enugu? Can you just use the chat box? Tell us where you're dialing in from. Let's know the number of people that we have and where you're coming from. All right, great. I'm already seeing a lot of Lagos, Nigeria. It's quite expected, actually. Anybody from Abuja? Oh, great. Chedo is joining us from Abuja. Awesome. Anyone else from any other part of Nigeria? Oh, we have somebody from Tanzania. Awesome. We have someone from Tanzania. That's quite awesome. Let me just get one more person identified somewhere else that is not in Lagos. All right, so I think we have so many Lagos. All right, so let's get straight into the conversation. We have so many people from Lagos, and Lagos is the heart of Nigeria. So I'm just going to quickly introduce our panelists so that you get to meet them. The first person, like I mentioned, we have Mr. Peter Nwofia, who is the partner, tax and regulatory services for Forbes Mazars. Mr. Peter Chinedu Nwofia is currently a tax partner at Forbes Mazars in Nigeria. He's a forward-thinking leader in the tax and regulatory industry. He has over 11 years of expertise and a reputation for fostering company innovation and success. He was born and raised in Oka, and Peter developed a passion for numbers at a very young age. He pursued a degree in accounting from the University of Nigeria in Nsukka. Great Lions. I'm also from UNN. So yeah, we have two Lionesses on the call. He also belongs to the Association of Certified Fraud Examiners, Texas, USA, the Chartered Institute of Taxation of Nigeria, and the Institute of Chartered Accountants of Nigeria. He has completed an MBA in Finance and Investment from Dangote Business School, Bayero University, Kano, and is currently undergoing an LLM in International Taxation at King's College London. Peter joined Mazars in Nigeria, now called Forbes Mazars, as a senior associate in 2016. Prior to joining Mazars, he had worked with Obi Okechukwu and co chartered accountant. His commitment to excellence and great work ethic propelled him to partner position in just 4 years of working at Mazars. Peter handles both tax reviews and computations, tax compliance management, and all taxation matters. So we know that we have the right person on the call to discuss this topic with us. So in addition to his role at Forbes Mazars, Peter is a sought-after speaker and has sat on numerous panels and conferences delivering insightful speech. So welcome, Mr. Peter to the Duplo webinar series. It's great to have you on the call. Our second panelist is Clementina Ogbolu. She's a seasoned and self-driven finance and accounting professional with over 12 years in financial reporting, internal controls, and process improvement, budgeting, treasury, and working capital management, taxes and compliance. She's worked with senior management and executives in driving and enforcing strategic objectives. She's well-versed in due diligence assignments, engaged in major top and bottom line growth. She's highly adept at profit optimization, fundraising, driving positive change, and capturing substantial business opportunities. Clementina enforces reporting and statutory compliance in accordance with financial reporting standards. She has extensive experience in the power, banking, automobile, and design construction, e-commerce, technology, and real estate industries. She's a graduate of accounting from Babcock University, a member of the Institute of Chartered Accountants of Nigeria, ICANN, and currently a CFA candidate at Singapore Business School. So thank you so much for joining us. We have two seasoned guests here, and I can only imagine how much fun we're going to have discussing this particular topic. Welcome once again, Mr. Peter. Welcome once again, Clementina. Please do say hi to the house if you can unmute, so we can get right into the conversation.
Good afternoon, everyone. Good to be with you.
Awesome. Clementina?
Good afternoon, everyone. Pleased to meet you. I'm glad and I'm open to hear whatever it has to say and the question here.
Awesome. Thank you so much once again for joining us. So let's get right into the conversation, right? We're discussing tax and we're discussing leveraging technology to simplify tax management. But before we get into the nitty-gritty of the topic, I want to first ask, as someone, Clementina, who manages finance teams, as Peter, who has been involved in tax and regulatory matters, how has it been for you managing tax for businesses? There's a lot of discussions, there's a lot of changes, there's a lot of policies that have come out. Tax has been a major issue from time immemorial. So let's first tackle this. How has it been for you as an individual, as an expert, managing tax for your business? And what has been some of your biggest challenges? I would like to start with you, Mr. Peter.
All right, thank you. Good afternoon, everyone, and I hope they can hear me clearly. I'd want to say that probably will start by saying that I never imagined I was going to be a tax consultant. I started off as an auditor, so we providing external audit services to clients. I also think I never loved being a tax consultant because I felt like being a tax consultant keeps a lot of things outside of your control, because while you want to provide the best of services to clients, a lot of things could depend on how the tax administrators view things, how they perceive things, and all of that. But when I transitioned into taxation, I found out that, oh yeah, this is actually the best place to be. And I realized that if I was in audit, I probably could have got so bored and left the practice. Yeah, I say that because it speaks to your question. Tax is a lot dynamic, so things keep changing. and the approach to things that don't change, that have not changed, also changes. So when you approach a certain tax office, the way they look at things differs from the way another tax office looks at things. It doesn't make it the best of things, but then it makes it exciting. And yeah, it's been interesting because for the clients we serve, they feel happy that we provide the best of services to them. So as you come in as a tax consultant, those people, you're helping them stay out of trouble. And for those of them who seem to be in between troubles, you help them to get out of the trouble in the quickest and the softest way that is practicable. So it's been an interesting part of my life, and I feel that's what I want to do for a very long time until I start going into gardening. Thank you.
Wow, awesome. Thank you so much. Clementina, how has it been for you managing tax for your business or managing the team that manages tax for your business?
Okay, all right, thank you. I'm going to counter what you said because it's really not interesting because you are always on the bad side of the taxpayer, who might actually be the manager of the company or the CEO of the business, because it also still depends, like you mentioned, the appetite of the company in tax compliance, right? So I've worked with some owners of the company and they are very big on, oh, we need to make sure that we are compliant on all taxes across board. While some might probably not want to, nah, tax is not really their headache, do you understand? So they try to not want to talk about it. So it's been a roller coaster, right? But at the end of the day, it's the interesting part is that it actually improves your ability to relate with people, right? You have to wear your emotional intelligence game, your relationship game to actually address tax issue. So like Peter mentioned, is that it's very, very dynamic. What happens in this tax unit is different. What happens with it, your interaction with this person might be different, but your ability to basically manage that relationship, right? I mean, in line with the company's policy on what they have, right, to pay. I mean, you can actually scale through those challenges.
Awesome. Thank you so much. Thank you so much. And it's good that we have different views. So we know that we are getting unbiased feedback at the end of the day. All right. So far that you've been managing tax, Mr. Peter, has technology helped you in any way to solve some of the challenges that you face? I know you said you enjoy doing tax, but I'm pretty sure that it comes with its own bag of challenges. So has technology helped you in any way to ease those challenges?
Well, yes. Yeah, so technology, well, like you said, I am a task consultant, so I speak from that background, just to give a little context to the responses I might be giving. So yes, technology has helped. First, I would say that um, when it comes to technology in tax administration or in tax practice in Nigeria, you also have to consider three parties. First is the consultant who assists taxpayers. The second is the taxpayers, because the taxpayer also has to come up with an infrastructure that enables the usage of technology or relevant technology. And then the third is the tax administrator, whether the FIRS, the Lagos State Internal Revenue Service, or other tax authorities, because prior to the Finance Act, we never had, prior to COVID, we never had the Finance Act saying that electronic filing or electronic submission of documents constitutes a perfect filing or a suitable filing. But yeah, now that we've had the FIRS say yes, sending emails, electronic documents, all of these constitute a sufficient and adequate filing, it has helped not just tax consultants, but also helped the companies, because they wouldn't have to incur the cost of, you can imagine having to incur the cost of moving from Abuja to Lagos to file your tax returns with a transfer pricing department that is only domiciled in Lagos, having to come from other states to do that. Then you move on to technology from the point of view of Remita, Now, payments, you can do payments from the comfort of your homes once you're logged into Remita and all of that. So people who would usually have to wait till, say, if you're filing for value-added tax returns, you have to do that before 21st of every month. People who usually have to wait till the next Monday to rush to the bank and probably they're in default would now have to do the payment from the comfort of their home. So the technology has helped the taxpayer in that regard. For us who are consultants, it has also helped us in the way we communicate with clients, in the way we exchange and collaborate, because we have different tools that helps collaboration, and how we also track the different compliance due dates for different clients. So technology has been a game changer. Unfortunately, there is nothing anyone can do about it. But I'm only scared that AI may keep us out of business. Yeah, that's it.
Okay, we still have the conversation of AI coming. Very important conversation. But Clementina, let me hear from you. As a CFO, how has technology impacted your work and in the way you manage tax?
Technology has been I think a very big win for me, right? Because I can remember when I started my career, right, and we want to file, just like Peter said, you have to like go to those tax paying units. You have to even carry the document itself to like go there to do what you need to do. You also need to go to the bank to do all of that. So I think all of that has phased out, like you mentioned. So technology has been a very big win for me because the logistics, the old timing that you need to take up to do all those type of mundane tasks, technology has taken it. And also, we also have to congratulate governments, right, for even having that cultural shift to think that, okay, let's make life better. We are taking from these people. Let's make that process a whole lot seamless. Then internally for my team, technology has been very helpful because it's not just about you knowing the tax to pay, but again, timing is of the essence in terms of tax and remittance. So I don't do that approval flow, right? For tax, I would actually congratulate technology as a person for making that process a whole lot seamless. Yes, please.
Awesome, awesome. Thank you so much. Um, so I have also a concern that I'd like us to discuss. You know, over the years, there's been a lot of changes on the way tax has happened, like you guys have said. Last year alone, there were some regulations that the federal government brought in. That's like, for example, the withholding tax, which has been later reviewed. There's also some proposals that the Mr. Taiwo, the chairman of on the Presidential Committee on Fiscal Policy and Tax Reforms, he and his team have been bringing up a lot of, they've been sending a lot of proposals that has gone through various readings. There's this zero tax that they are bringing on food, healthcare, and education. There's the exemption on transportation, renewables. There's a lot of conversation about VAT going on. He's also looking to review payee tax based on what you're earning, right? So a lot of changes have been coming up and a lot of changes are still in reading and will come up. As finance leaders and as tax experts, how are you managing these changes? Do you think it's possible to still, I mean, how do you really stay updated? And do you think it's possible to still be compliant with the way things are always changing? Mr. Peter, let me start from you.
Yes, if you ask me as finance and tax people, how do we stay updated with the frequent tax policy changes? It is easier for someone to think that things are changing too fast and that why not stop these changes from moving? That sounds very simplistic, right? So if we stop things from changing, then maybe we wouldn't have problems, right? But then it's not possible because the world changes, and as the world changes, the way we approach things change. Now, I give an example. Before 2020, 2019, we have always had in our Companies Income Tax Act that if you're a non-resident company is a company that is not registered in Nigeria, so you're operating outside of Nigeria, that if you're a non-resident company, you would be seen to be taxable in Nigeria if you have a fixed base in Nigeria. Fixed base, something you could call permanent establishment, or if you have a dependent agent. But then that did not make sense in the 21st century or in the year we are, because people do not have to physically set up in Nigeria to operate in Nigeria. They even do not have to use an agent, whether physical, dependent, or independent agent to operate. They have to sit where they are. You make orders on Google, on Amazon, and you do a lot of things, and then businesses are done. People take profits out of Nigeria. But then the laws we had then was waiting for them to have a fiscal base in Nigeria or fixed base in Nigeria. So because the world has changed, because the world has become so globalized, because technology has even changed how people do businesses, it has affected how our laws it has affected our laws too. So we moved from that to saying if they have a significant economic presence, so we're not just waiting for fixed space again, we're waiting for significant economic presence, which is defined around interaction with people in Nigeria, but with domain and all of that. So I just wanted to say that. And then you're asking, how do we get updated? How do we keep up to date with these changes? One, frequent trainings. Yeah, you need to have somebody, whether a consultant or you register with a tax school where you get updated with changes in the tax laws. You need to do that. Secondly, you can also, because there are technologies, there are tax apps where people can track changes in the tax laws. You could also meet tax technologies who come up with AI-driven tools that can track these changes using the AI technology to ensure that you get alerts and notifications when changes are made to your tax laws. Then you also have to, it depends on the technology you invested in, because it has to be robust. It has to be integrated to your ERP and quite a lot of things, so that when things change, they can automatically, or they can in a certain way, let you know whether those changes would have a reflection or whether those changes will have an effect on the type of business you do or the type of transactions you do. So yeah, that is how we keep up to date with these changes. And for us, it's our work. Otherwise, we'll be out of business. We have to do what we have to do.
Very true. Very true. Thank you so much. And I'm glad you also mentioned the aspect of having a robust technology that integrates with ERP, which is very important, especially for enterprise organizations, right? A significant change in a policy in something as simple as tax is a lot to deal with for an enterprise, managing so many people, so many customers, so many very, very complex supply chains. Right? A lot of things have to change, and whatever technology you're using needs to be able to adapt to those changes in as fast as possible. So thank you so much for mentioning that. Clementina, let me hear from you. How have you been coping with the change that happened?
I think as a business, it's also very important that we tell our mind that change is actually constant, right? So there's nothing we can do about it, right? So it's just for us to like put the right structure in place to, keep the wheels going. So for things like for critical tax like tax, right? There has to be like a what I do, right? And what most businesses actually do is having like a process owner that actually own that process end to end, right? Drive that change in the business. Then even think deploying again technology again, because you have like a whole tone of invoices for clients, especially when you're working for a business that has like multiple subsidiaries. How do you manage that process? So having like a investing in the right ERP system or a supply chain system that can actually make that deduction at source, so that at least you can tell at the end what's the right amount to remit and have the platform that particular remittance. So change is actually here to stay. We have to like keep our to that we comply the right to having a owner to drive change.
Awesome. Thank you so much. Thank you so much for that. Mr. Peter, you mentioned something about technology and having a robust technology that is able to integrate with ERP. Are there other features that you look out for, as a consultant, when a business wants to adopt a technology to ease their tax operations? Are there features you look out for when utilizing the technology for tax operations?
Yeah, certainly yes. When Clementina was speaking, she talked about, I think she mentioned something about withholding tax, where you have a technology that is able to calculate and deduct the withholding tax before payments are made. So yes, for me, we look out for if you want to choose or different pick from different options. One of the things you should look out for is one that complies with Nigerian tax regulations because there are so many of them out there. You need taxes quite local and national a lot of the times more than it's international. So you do not deploy a technology that is for South Africa and then you put it in Nigeria without localizing it. So you need to be sure that that technology complies with the Nigerian tax regulation. So you need to speak with your tax consultant or a tax expert to confirm that. Then the second thing is you need to be sure it's flexible. For instance, that was the point I wanted to make when I referenced to Clementina's comment. We usually had our VAT rate at 5%, now it's 7.5%. So if you deploy a technology that is not flexible enough for you to change that rate from 5 to 7.5%, then it means you've gone for the wrong technology. So it has to be flexible enough to adapt to changes in the tax laws. Then it should be something that can easily integrate with your your ERP system. I talked about that already because you don't want to run a technology where you have to still manually do things. So that technology should be able, even if it's not AI driven, it should be able at minimum to know that this is when I post for sales, that when I post for sales, sales usually has something to do with VAT. Therefore, it should be able to connect with your tax technology to calculate the VAT where applicable. So the protocol must have been defined at the point of installation. Then a technology that, if possible, can track changes in the tax laws and real-time tax tracking and analytics, and something that also is secured and your data is not everywhere. So data security is important when deploying technology. Thank you.
Awesome. Thank you so much for those very valid points. I'm surprised you didn't mention money. You didn't mention how affordable it is. As
I
a tax
think
person, maybe it's
Clementina is a
not,
finance person. It's a problem. She'll talk about it.
Clementina, do you consider money when trying to pick a technology? Do you consider how much it costs, or where is the cost of the technology tool when you are trying to choose a tool for your tax operation?
So okay, so if I'm picking the cost, there's what we call the cost benefit analysis, and benefit outweighs the cost. Right? You don't want to now pay everybody for that lapses, right? So it's just we just have to find a balance between both of them. Yes, please.
All right, awesome. Thank you so much.
So for am I continuing from where I stopped?
Yeah, go on, please.
No. I mean, Peter actually said everything right out of my mouth, especially the parts where he said, talk about the flexibility part. But in my head, I know I've used a tool. I'm not going to call names, right? The VAT rate there was like 5%. Now I want to change it to 7.5%. I mean, it distorted the old financials from the beginning, not even from when that change actually occurs. So that flexibility as to how do you that tool that can, because it's okay for you to like change it from 5 to 7.5%, but that change should impact from when it actually happens, right? So that tool should be flexible enough to, in fact, flexibility is very, very important for me because we live in a world of change. So I should to even do that, affect that change myself. So that very key. Peter actually highlighted everything and also.
Awesome. And I also noted many of the he mentioned having a robust tech that can integrate with ERPs. And he mentioned a very valid point about tax being more local than international, and your tools will be able to adapt to local changes and track those changes, and implement them fast, track the tax laws and implement them fast. And you also mentioned about flexibility, very important talking points. Thank you so much. So I also want to ask, I know that many businesses have been hearing about using technology for their tax management. If I have a business and I choose not to use technology at all, are there risks to my business? Is there a risk to my business? Are there financial implications that I should be aware of if I decide to do all things manually when it comes to tax operations? Is it even possible, in this day and time, to decide to go manual? Mr. Peter.
Oh, yes, yeah, to be honest, I think it's still possible for it to be manual, but the possibility is gradually fizzling out. I say this because something is in the works. The tax authority is rolling out the e-invoicing merchant buyer system, the Federal Inland Revenue Service, and it has picked on, I think we're still at the pilot phase. So the first pilot, about 3 companies has been picked. So MTN, Huawei, I can't remember the third company, but these are companies that have been picked for the pilot phase. And the plan is that from the e-invoicing system, you no longer have to issue invoices it without connecting to this system from the FIRS that enables them to see everything from day one or real time, actually. So the FIRS is able to know what their VAT is, what the VAT due on each transaction or sales transaction is, and they can at least estimate the company's income tax to an extent. So if you're not, I'm just saying, if you're not having a technology-enabled system in your business, when this law is, when eventually it becomes a law, because the new tax bill has come up with clauses that allows the tax authority to adopt technology, and I don't want to say impose, but kind of impose it on taxpayers. So if you're manual and you're not using this technology, then you would be forced to use that technology because that would probably be the future, the only way of being compliant in the eyes of the law. So if you're not, but then back to your question right away, if you're not using technology or adopting technology for your tax compliance exercise, then you run a risk of not being compliant, especially if you have lots of transactions, if you have lots of activities, you may not meet the timeline. There's so many timelines to meet. You have so many taxes to meet. You have so many taxes to pay or comply with or file. So if you're not adopting technology, you're probably risking that. That is what I have to say about people who've not adopted technology. Then the cost too, if you're not adopting technology, if I'm a consultant and then I meet a client who has not adopted technology, I would most likely bill that taxpayer more than I would bill someone who has adopted technology. The reason is because technology reduces some risk that comes from manual errors. But because you're still manual, I have to put in more resources to ensure that that risk that is usually taken out as a result of technology, that risk is covered from a manual perspective, or I have to adopt a technology that enables me to manage that risk. So you have to pay more usually if you're still manual, but then that is cheaper for someone who has adopted technology. And these are the things I have to say for now. Thank you.
All right, thank you. I think that also is the reason why you might not mention money when talking about the features, because the business owner needs to know that if you don't want to spend money on technology, you spend money on the tax consultant at the end of the day, right? So thank you very much for that. Clementina, what do you have to say from a CFO perspective about financial implications and risks to businesses who want to operate manually?
Yeah, thank you. So I don't think that anybody can actually operate manually. So even if you think you're escaping the process now of going digital, right? That cost is actually building up until when you now want to have to do like tax audit and they come for you, then you'll be forced to actually use the digital system to actually correct the wrongs, right? So I mean, just like what Peter mentioned about the new system of digitizing the invoicing and all that, you can't actually escape that process, right? Yes, there may actually be strategies around curtailing that cost that probably needs to be made, but technology cannot, you can't actually rule out technology in tax remittance. So that's why there are like great tools that you can actually deploy to sort of like manage that process. So we can, I'm not an advocate for manual process. So it has to go, technology that has to be put in place.
Yeah, and it's even a lot of work for finance teams at the end of the day. Thank you so much. Let me ask a follow-up question, even though I know it was Mr. Peter that brought it up about the conversation around AI. What do you think that AI will play when it comes to management? Have you any part that AI has played in managing tax, implementing that for you?
I think AI can do a lot more, right? Like predicting the revenue, right? Which is what I think government is actually driving into. So if they're looking at this is what they expect to get from what's it called, from the tax budget, from the revenue from what's it called, from the citizens' rights. So AI is able to predict their revenue for no matter the time, with no time bound actually. Then in terms of also automating, because we know there's a whole lot of data in the cloud, right? AI should be able to detect fraud because that would be like a place where data security actually comes in. So AI should be able to detect such. Also, in terms of monitoring compliance, even if we think that yes, we're actually moving into.
Yeah, I think Karantina's network has logged her out. Mr. Peter, do you want to also take that? Okay, she's back.
Hearing.
Okay, all right. All right.
Can
We'll
anyone
for
hear
a
me?
second. We can hear you now.
Okay, so that's few of the points that I think that AI would be able to play. I know blockchain is not, but AI is very important.
Awesome, awesome. Mr. Peter, do you want to respond to that also?
Yes, just a few things. I had what Clementina said. So yes, one of the things AI can do, because the way I look at AI is artificial intelligence. So what are the things you would normally do as a taxpayer or as a tax manager? What are the things you would normally do? Okay, part of the things you could normally do is to maybe you already scheduled that on the 15th of every month, you file your tax returns, VAT returns. AI could prompt that and then probably do that for you on the 15th of every month. I'm just imagining where AI is something that is just limitless. So from a tax consultant perspective, what are the things we usually do for taxpayers? We help them manage their compliance timeline. So instead of having to set calendar and do all of that, AI will do all of that, send emails, even help you come up with responses to queries from the tax authority. Then we go to the aspect of the tax administrator. What can AI do? I think AI, they could come up with AI-driven chat boxes that can respond to queries, because I think one of the things or the goal of the FIRS, if I'm using them as an instance, is to be the choice tax authority, the best tax authority, the most friendly tax authority. You would see that AI can help reduce the taxpayer service department, where you employ a lot of humans who talk to taxpayers. Instead of humans talking to taxpayers, you just have a chat box that is embedded on their platform, where some questions, some queries are issued to people who have not done things the proper way. Maybe when people have done their filings, instead of the FIRS having to write to say, oh, for desk, we are doing a desk review, want to come and do a desk review at your office or send letters. No, once you file your returns, AI will do a desk review and send to you, and then you respond. So it's quite something that AI can do. So it's something that is beneficial to all the parties. So just imagine what you would usually want to do then tell AI to do that. I had just a little story. I had my colleagues come meet me the other time. And then I had people from my innovation team. We have an innovation department, not tax department, innovation team. So they came to meet me and then they said, what can we do for the tax unit? And then I called my colleagues in the tax unit and I said, anything, just tell them anything, anything. Just imagine anything that you think any tax problem that you think needs to be solved. Just say it to them. They'll go and figure it out. That's the way I think AI or technology works. The technology doesn't want you to think for it. The level of technology where we are in, if we're talking about AI, it doesn't want you to think for it. It wants you to throw everything at it and then it figures it out. So that is what AI would usually do.
Awesome. Thank you so much for your response, Peter. I have a question I want to ask, but while I was thinking about that question, I was quite skeptical about whether I should ask it or not. So you know that at the last election, there was a certain candidate who was always comparing Nigeria to some other countries, right? I would also tell us what they are doing there and we can do here. So I want to ask, Nigeria right now, when it comes to digital tax transformation, how do you think we compare to some other countries? Maybe not developed countries, but in terms of developing countries, how do you think we compare? And are there countries, like the candidates will always say that we can emulate when it comes to how we manage tax? I know you mentioned that tax is more local than international, but are there countries that we can look at and emulate in the way we manage tax? I think let's start with Clementina. Maybe she has some ideas. So, are you still on the call, Clementina? Okay, yes, you are.
No. So I wouldn't say that. I think the foreign countries, right, they are way ahead of us when it comes to taxes. But I also would say that Nigeria has also done a good job, because if you look at the trend as to how um, tax management actually started, we have actually done a great job. So I think the US system is actually a good one, and even the UK system. So again, like Peter also mentioned, we haven't even got into the interior part of Nigeria, but there are still some people that have both access to this type of system, right? They are still doing it in the most traditional way. So I think that there's still a whole lot more to be done in terms of that area, in terms of tax awareness and all those in the remote areas, right? So I think until then we can have like a reasonably type of comparison with the countries outside Nigeria.
All right, thank you so much. Peter, your response.
Yes, just to add to what Clementina said. So for countries we can emulate, there are quite a lot of countries we can emulate. It doesn't mean we are doing so badly, but yeah, it doesn't mean we are doing so badly. Usually when it comes to tax in the international space, people tend to look at the EU, because EU has about the most robust tax system. You can imagine the tax laws in the EU, they dates way back. And they've tried to do, and also because they have a near perfect economic community, the European Union, you see how even the local taxes in Netherlands is managed when it moves from Netherlands to, say, moves to Germany and all of that. So I would say EU. But I've also interacted with Taiwo Edele, and then he's mentioned that countries like Rwanda in Africa, they're doing quite a lot. So Rwanda is doing quite a lot when it comes to automation of the tax system or the tax administration in Nigeria. So these are countries I would refer to Nigeria, and I know that the FIRS, who is quite the leading tax administrator in Nigeria, is doing quite a lot. Also, I have to give some kudos to the Lagos State Internal Revenue Service, because when it comes to filing of returns, the annual returns that is usually filed in January, you see that everything is automated. You can do all of that from the e-tax portal. And when you compare LRS with other state internal revenue service, they're way ahead. And I think others are trying to catch up, and it's impressive. But there's still a long way to go, because how do you get people into the tax net? We're still talking about the same level of taxpayers.
Yeah.
Every year we say our tax revenue was improved from, say, 12 trillion to 39 trillion. But who are we get new taxpayers, or is it just the old taxpayers paying more taxes? No, I think we need to think of a tax system or a technology that can connect with, even from that can start with data gathering from people when you're born, check, oh, this person should be 18 years by now, or then we check, or has the person died? So we take the person out of the system. But there should be a system that connects that, maybe with the BVN, the NIN, and all of that that is happening. We could get to that point. But in the other countries, you see social security number. With that number, people have quite everything about you, your address, and your earning potential. Thank you.
Awesome. Quite very interesting perspective you have about what we can emulate. Thank you so much. I don't have any more questions. Maybe our audiences have questions for you based on what we've discussed. Please, if you have a question for Peter or for Clementina, do well to drop them in the chat box or use the Q&A feature. I'll be looking out for your questions and to answer them. But in the meantime, we had some questions that came in while people were registering. And we had about 2 that I think that you can respond to. Maybe you take them each one. There's somebody who said, how can I get myself acquainted with tax collection processes? I know the question sounds a bit vague, but yeah, how can I get myself acquainted with tax collection process? I think you answered a bit of that, Peter, during the conversation. Is there something else you'd like to add?
Oh, no, I only wished I had more context to the question, because tax collection is done by the tax administrators. So it depends on the tax you're talking about. If it is value-added tax, that is strictly under the purview of the FIRS. If it is companies income tax, under the FIRS and all of that. But if it is personal income taxes, it is administered by the tax authority of the state where the individual or the employee is resident. So that's what I can say about this. I really wish I had more context about the question.
Can you hear me, Peter?
Yeah, I can hear you now.
Awesome. All right. Okay, so for the second question, let me ask the second question to Clementina. Somebody is also asking, let me see. How can technology assist in loopholes that have identified in tax remittances? I don't know if Clementina, you have
that was, I can hear you, but I think Peter would be the right person to answer this question because it's first hand on this own.
So
Okay.
can I hear the question again?
The person is saying, how can technology help to assist in loopholes that I have identified in tax remittances?
Oh, okay. I want to imagine this is coming from a tax administrator. Yeah, so let me just, okay, there are 2 ways. It could be coming from a taxpayer who really wants to ensure completeness in payment of taxes. That is
Yes.
one. It could also be coming from the tax authority whose job is to ensure that people pay completely. The way I look at it is AI can do, data analytics. So there are so many predictive analysis that could be done using AI. AI-enabled technology can look at, as you're filing, let's assume it's the tax authority. As you're filing, it's already picking everything, the revenue you filed, the industry you belong to, the trend of things that has happened in the economy in that industry, and has a prediction of what should be the range within which your tax should fall into. It should also have the ability to compare. That technology should be able to compare or benchmark with other people in your industry, check what they have paid, people who've had that certain level of revenue. So it gives, at first sight, an idea of whether there is completeness or whether there is a risk in terms of the full payment of taxes. For the taxpayer, that is the same thing. If you have that type of technology to run, once it runs a process on your system or your ERP, it's able to tell you whether you have fully complied, because that technology also should have somewhere where it keeps track of all the taxes that it thinks you should pay, being a company in this type of industry. Oh, you should pay VAT, check, check, check. You should pay CIT, check, check. Due date, check. Stamp duty, checkbox, like that. So that technology should have that type of checklist. So that's what I understand from the question.
Awesome, awesome. And I think that based on what you just said, it also speaks to the fact that whatever technology you're adopting should also have a good reporting system. So if it's able to keep track of all your payments and the various VATs, when it's generating the report, it should be able to show you all those payments that have been made per time. So you're able to quickly see where there are loopholes, right? Awesome. Thank you so much. We have one question. I think that might be the last question that we have on the call, although this is a more generic question. It says, what is the effect of illiteracy on tax automation in Nigeria? And how can it be mitigated for efficiency of the system? This sounds like a project, like a project assignment, but I'll allow our panelists to answer if we have answers to them. The effect of illiteracy on tax automation. Either of you can take it. Whoever is led to take it.
Okay, I want
Okay.
to
So
Clementina, ladies first.
no, you please. You can take it, don't worry.
No, I think I want Clementina to answer because there's a question already waiting for Mr. Peter in the Q&A box.
Okay.
Yes.
Okay. So I would say that even if illiteracy is not a reason to not be compliant, right? But I think in the age where we are, as little as maybe the access to information can actually support that process. And I would also think that from the payer's perspective, right? I mean, the payer might actually be the owner of the business. So there's a reason why there are professionals that can actually do research to further bridge that gap. There are also tax consultants that can actually support that process, right? So again, it's just for us to like have the improve our knowledge on a day-to-day basis, right, as to what and what not the tax process is in Nigeria.
All right. Thank you so much, Clementina, for responding to that. Mr. Peter, there's a question for you that says, what is your perspective to human factor in trying to beat technology in a tax system?
What is my perspective to what?
The human factor in trying to beat technology in tax system.
Oh, in trying to beat technology.
Yes.
Oh, yes. Well, the thing is that when we talk about technology, at least for now, I don't know, I can't really imagine the extent AI can go. But let me talk about technology without much influence from AI. Technology without much influence from AI is still going to be driven by humans, right? There's still going to be there's still going to be the technologist person at the back end managing the platform for the FIRs. So if these humans decide to interfere in the process, it affects the whole thing. But then the good side about it is that when humans interfere in an established technology protocol, there is a trail. You can always see, oh, it's at this point that something happened. So you can have an audit trail. So that's why you have people who are, say, risk consultants who try to do penetration testing, all those VAPT tests to check whether how much of interruption can happen negatively from an external force on this technology. So yeah, I think humans can still do something, but it's becoming the possibility or the chances of success for human intervention is becoming slimmer day by day.
All right, thank you so much. And one final question for you. I hope this is the last that we get, because this person is talking about tax consulting. It says, considering dynamism and complexity of tax in Nigeria, I'd like to ask, how can a newbie in tax consulting navigate through the career path? A newbie in tax consulting.
Okay, yeah, for me, I think the first thing to do is, as with every other new venture, as with every venture you go into, the first is to be committed to it. So if you're committed, whether it's tax consulting or being financial controls or all of that, the first is to show commitment. If you're committed to it, there is nothing you cannot do. I mean, if you're committed to it, that is what makes you devote more hours to reading the tax laws, because tax is actually a law. So everything I tell people when I meet them, I say, see, is it in the tax law? You don't say things off the top of your head. Where is it in the law? Because tax is a law. If you're talking about personal income tax, you have to check it in the Personal Income Tax Act. If you're talking about corporate taxes, you have to check it in the Companies Income Tax Act. And these acts are acts of the parliament. So these are laws. So you must be committed to reading the tax laws, because that is where you start developing the theoretical foundation. Then you move from there to looking for where you can become an intern, whether in a tax firm or with an individual, where you intern, because that's where you get the. Even when you want to become a member of the Chartered Institute of Taxation, they would also want to be sure that you've had some hours of internship in the tax firms. So these are the two things I can say to anyone who wants to move into tax practice. And hopefully you find fun doing it.
All right, thank you. Thank you so much, Mr. Peter. I think that's the last question we have for the webinar. I had some fun questions I wanted to ask, but unfortunately, Clementina has dropped off the call. And I'd like to hear both your perspective on those questions. I hope she comes back, but just because of our time, I'd want to ask you what's your preference. So I'm going to mention two things, and I want to know what your preference is, for those two things, right? If Clementina joins us on the call, then I'll also ask her. So, Peter, tea or coffee? Which one do you prefer?
Coffee.
Coffee. I could already guess that's what you choose.
Coffee.
Okay, coffee. Great, great. Working late nights, or you work strictly in the day and don't do anything at night? Which one would you prefer?
You say late night, morning. I think, yeah, I prefer that.
Late
I like
night
to be
into
a
the
night
morning.
crawler. Yeah.
Okay, okay. Nocturnal beans. Nice, nice. Okay. Which would you rather work for based on your experience? Startups or an established organization?
I hope you listen and you don't judge.
No, we listen, we don't judge. We're not judging here.
I'll say established organizations.
Established
I'm getting
organizations.
old now,
Okay,
yeah?
okay. Clementina is back on the call. Let me get her feedback for the previous one. Welcome back, Clementina. So
Okay.
I'm asking Mr. Peter his preferences for the two things I'll be mentioning. So let me ask you before we move further. Tea or coffee?
Tea,
Tea. Wow.
tea. Yes.
Both of you are two different ends of the finance industry. Okay. Working late nights or you work strictly in the day, don't touch work at night. Which do you prefer?
It's
I'll come again. I didn't
late
get that.
nights.
Did you say late nights?
Late nights, late nights.
Oh, okay, okay.
Yes.
At least you have something in common now. Okay.
But
Working
I still
at
work during the day, but I'm more
oh
prepared.
yeah. Oh yeah, definitely, definitely. You know, some people do less work in the day and they move all their work into the night. So they sometimes sleep, sometimes are lazy in the day because they know that at night they're wide awake. So they will finish up every deliverable within that night. Right. Okay, so next questions. Working at a startup or working in an established organization?
I love startups.
You love startups. Wow,
Startups.
I thought everyone was
Yeah.
running away from startups. Awesome. It's good to know. All right. So
Startups with the CEO open to change. That's what.
definitely, definitely, definitely. All right. So next question, working from home or working from the office? Mr. Peter.
Working from the office. I love
Oh,
to see
wow.
human beings.
Okay. You're a rare breed in that case. Clementina, how about you? Working from home or working from the office?
It's not a bad idea.
You said working from home? Okay, I'm struggling to hear your response. Okay, probably her network is it's not very stable. But let me ask the last question to Mr. Peter. Would you rather have 10 million naira right now or 50,000 naira every month for the rest of your life? This is a finance question, money question.
Um, I think 10 million naira now, because why we're talking about Nigeria, just naira is Nigeria. So the
Okay.
inflation, if I wait for 50,000 naira next month, I'm not sure what the inflation rate would be. And if I have 10 million naira, I could use 10 million naira to invest in something that would give me more than 50,000 naira, I guess.
Awesome. Awesome. So if it was dollars, your answers would have been different.
Yes.
Okay, okay, all right, good to know. I think Clementina is having some network issues, but thank you so much. Thank you so much, everyone. I don't think we have any other question, but with that, we've come to the end of the Duplo series, leveraging technology for simplifying tax management. I'd like to say a big thank you to our panelists for sharing, for taking the time to share your knowledge, share your insights and all your experiences with us. And also to all the wonderful attendees that have stayed from the beginning to this point. We had a very consistent number stay from the beginning up to this point. You've been very interactive in the chat box. Thank you so much. And please look out for Duplo and our emails. We'll try to share the recordings with you so you can review some of the things that we've discussed here today. Yes, definitely we'll share the recordings with you so you can go to the webinar. Also try and follow us on our social media pages and look, and then also visit our website, stripeduplo.com. We have a lot of offerings for businesses, especially finance teams. Our solution is able to handle some of the things that Peter and Clementina have said you should look out for when choosing a technology solution for your business. When it comes to tax management, our solution is as robust as possible to integrate to your ERPs and also help with all things automation to ensure that you don't have to do things manually. So please look out, and also look out for our other webinars. We have another webinar coming up soon. We'll be glad if every single person here could also join us and invite one or two finance colleagues to our webinar. With that, I say thank you very much for joining. Do enjoy the rest of your day and enjoy the rest of your week. Thank you so much, Peter. Thank you so much, Clementina. Take care and bye-bye.